What's going on, everyone? My name is Jeff. I hope everyone had an awesome holiday weekend. I know there's been a lot of Black Friday shopping going on. I was actually out of the state, had a very nice trip down to the beach, got to spend some time with some family, and now I'm back ready to work. And so what do we got? About 24 more days until we have another holiday, and hopefully we'll get a little bit more rest and relaxation, but the market is gonna run. Now guys, this is the 3 stocks to buy video for December 2019. One thing I want to mention, we are running into all-time highs. So if you want to go back just a little over 1 year ago, guys, you remember that huge dip we took in December 2018. S&P 500 hit 2,350 points and has rebounded over 800 points since that time. One of the most incredible runs in the history of the stock market. I can remember telling a lot of people to keep buying those dips. You know, we're going to work our way out of this. I had no idea how far that dip was going to go, but 2,350 was the bottom on the S&P 500 last year. Like I said, we've rebounded 800 points. I've never seen the S&P move that much in 1 year. Unbelievable from December 2018 to December of 2019. So keep that in mind. You might want to start thinking about selling some of your long-term positions that you've been holding for a while and start rotating out into other things. I have 3 stocks in this video I feel are very good at their current price. Obviously, they could go a little bit lower. We are going to have to bargain shop though, because pretty much everything is reaching all-time highs and going beyond that. So we're going to get into that here in just a moment. Real quick though, guys, if you don't mind, please drop a thumbs up on this video. I appreciate all the support. And make sure to subscribe to the channel if you have not done so already. So coming in at number 1, guys, is Twitter, ticker symbol TWTR. Now, the reason I mentioned Twitter, guys, it is actually roughly about 50% discounted from its highs in 2019. September 6th seen a high on Twitter of $45.42. I think the analyst got a little too bullish on this stock. I know I trimmed my position down when it hit $43, and I called that stock very, very well. Because right here on the 23rd of October, when they reported earnings, like I said, from that point at $45, Twitter actually getting down around $29 on a good, just not great earnings report. Okay. The big misconception is that Twitter had a really bad earnings report, and that just was not true, okay? They actually had a pretty good earnings report that was not received well, by Wall Street analysts. So what does that mean? We're looking for good stocks that are overly beat up. Twitter at $29 to $30 is a buy. I even have some call option strategies that I'm using in Trade Alerts Pro. If you would like to know more about that, make sure to go check out my course. It is the first link in the description box. But as you can see here, over the past month, the reversal is starting to set in for Twitter. Let's take a look at their earnings. And like I said, guys, one thing I do really want to emphasize about Twitter, this is not a stock I can guarantee you is going to blow earnings out the next quarter, okay? Sometimes they stink it up 2 quarters in a row. That does kind of seem to be their rhythm. They'll miss 2 times, then they'll beat 2 times. They'll have good guidance. Like I said, you cannot deny Twitter is a very powerful internet stock. It is definitely a part of our culture. It is not going anywhere. It is growing, and the margins this company have are remarkable and could be much, much better. So Twitter did dive 16% after their quarter 3 results. Obviously, they missed on revenue and earnings, but these misses, in my opinion, were not as bad as they were perceived. The downside Q4 guidance, they seen a $940 million to $1.01 billion in revenue with operating income of $130 to $170 million. Again, that operating income, Twitter has made leaps and bounds to become more efficient in that area. Snapchat was also down during that period of time. They didn't have a very good quarter either. If I had to take a pick, which company is more solid, I'm going to say Twitter, but Snapchat is also a very good buy as well. The company says Q3 headwinds included revenue, product issues, and greater than expected advertising seasonality in July and August. Ad revenue was $702 million in the quarter, and data licensing was $121 million. Again, let me re-emphasize that these type of issues are not rare if you are a long-term shareholder of Twitter. I know, for example, you are going to see some of these inconsistencies. This is not as good of a company as Facebook. If you are going to play the social media stocks, Facebook has to be number one on your list. I just see an opportunity where Twitter is down at a big discount, and it is a good time to add to your position or start one here at $30. So the second stock to buy for the month of December 2019, guys, is going to be Hasbro, ticker symbol HAS. I'm going to give you a very brief fundamental analysis on this stock, then we'll go to the chart, and I think it will all make sense being that I've done this in reverse. So profitability, operating margins, all positive. Like I said, I would like to see that profit margin come up, maybe up to 9 or 10%. Operating margin at 12% is fantastic. Return on assets and return on equity, both positive. Did see a little bit of a shift down this past quarter, but the fact that all these metrics are still positive, this is, my opinion, one of those stocks you just have to make room for, okay? Again, this is not one I really feel comfortable playing calls out 2 to 3 months on. This is probably one I would want over the next 6 months to a year. This is a true value play, a stock that did get hit really hard on earnings. And really, it just keeps getting better. Let's take a look here at the balance sheet. Like I said, most of the time when you go and look at a balance sheet, you're going to be looking at a very high leverage type of company. Of course, this is more in the toy and gaming industry, but their total cash of $1.09 billion compared to their total debt of $1.85 billion. That is very, very good when you compare it amongst its peers, okay? Current ratio is about 2.33. I find that to be very, very balanced and strong for a company of this size. Down here at the bottom, the operating cash flow of $860 million compared to levered free cash flow $365 million. Now, I just recently watched an interview with Kevin O'Leary. You might know him from Shark Tank. I was very surprised that he said that the most important thing you're going to look at for a company is not earnings, not who the CEO is. It's none of that stuff. The most important thing you're going to look at when investing in a company is cash flow, okay? As you can see here, their operating cash flow, very strong, and their levered free cash flow also very, very strong. So what in turn does that cash flow do? It allows them to pay a very nice dividend yield. As you can see, the forward annual dividend yield is 2.67%. Keep in mind, every time this stock drops $2 or $3, that yield is actually going up. So that's pretty good incentive to continue buying. Pays out about $2.72 yearly per share. The next dividend payout date is November 14th. I actually collected a nice dividend payment for Hasbro, and then their ex-dividend date is October 30th. So, very fundamentally strong company. And did I mention quarter 4 is coming up? What does that mean, guys? Holiday shopping. Of course, you have to own Hasbro going into quarter 4. History does repeat itself. This is a video gaming and kids toy company. They will probably knock earnings out of the park. I would guess by Q2, maybe Q3, kind of just depends on how it's all played out. But I do want to buy Hasbro on any weakness. They did report earnings, guys. They came in low on guidance. Earnings were a little bit disappointing, over $25. Fell off the share price here in October. And then over the past month, pretty much the same exact chart pattern as Twitter. The reversal is in full swing. We've come out of the $94 to $95 range. Now we're up in the hundreds. And today we're down a little bit, but still trading around the $100 mark. I started buying shares of Hasbro around $94, $95. And again, do not go all in. Give yourself plenty of room in case this one dips further. We see a big market correction, but Hasbro is going back to 120. My opinion, guys, in 4 to 5 years, probably closer to 150 and 175. All right, and the third and final stock we are going to cover for the month of December 2019 is going to be Dollar Tree, ticker symbol DLTR. I've made and I've talked about this stock a lot in the past. This is a really, really strong dip buy. One I want you to be a little bit more patient with, simply because the trend has not showed any type of reversal yet. Down 6.71% over the last week. Down 20% over the past month. This was another company that got hit hard on earnings. Keeping a very close eye on it. Again, this is another value play. When you talk about the retail giants, of course you have to talk about Amazon, Walmart, Target, Best Buy, Costco. But I feel like Dollar General and Dollar Tree are also both stocks you have to own. You have to kind of put in that category, simply because this store appeals to a certain type of budget and a certain type of family. So if you look at the chart right now, if you look at the way Dollar Tree is trading right now, it's only up 2% over the past year. And like I said, guys, be patient with this position. It is still falling. It got under $90 today, might be down around $87 to $85 tomorrow. This is a good stock to have on your watch list and start watching. On a 5-year chart, up about 30.83%. January 2018, this was $114 a share. And then here in October was about $116 a share. So this is a stock that does bounce back. As you can see, the 5-year chart, a little bit choppy, but a great overall long-term value play. Let's just keep an eye on the volume, okay? When you see those higher volume numbers, I want you to immediately associate those high spikes of volume with a lot of sell pressure. So we do want to see that volume shore up a little bit, get a little bit closer to its daily average. And then we want to watch some oversold indicators. This is a very, very oversold stock, going from $116 down to $89 and probably going to go lower. Could lose $30 of share value. I think at $30, roughly $85 to $86, it's almost an immediate buy. But let's just kind of be patient with this one. Put Dollar Tree on your watch list to keep a close eye on it. That's all I got for the video, guys. Go down to the comment section, share with me any thoughts and opinions. Tell me some stocks that you're going to be watching for the month of December. I'd really like to hear about that. Thank you, as always, for watching the video, and have a great day.